with that, let me go to our panelists. We are very, very happy today to be joined by Vastin Prifty and Paul Feldman. And let's get right to it. Vastin, could you just take a couple of minutes and tell the audience a little bit about your professional career and kind of how the AI and the RAI is fitting into it?
Thank you, Will. Thank you. Hello, everyone. So my name is Vastin. I'm the Chief Risk Officer for Keytrade Bank. So it's a Belgian-based bank, which is a fully digital bank. Very quickly on my career, I started at EY working on hedging, so mostly for big banks, so a lot of derivatives and a lot of quantitative topics. And then I moved to the current bank when I am to work on the launch of a digital mortgage loan application, so on the Belgian market. So the idea, I shifted a bit to retail banking, but very focused on modeling also, because it's kind of a lean bank. And then for the last 3 years, I have the Chief Risk Officer's position, so everything related to cybersecurity, non-financial risk, operational risk, and financial risk are in my realm. And Bill, I don't know if we need to go to how AI came into the picture, maybe?
Yeah, sure.
So in very few words, as I said, we worked a lot with modeling. So a lot of econometry, scoring models, a lot of statistical topics to make decisions on credit risk, which could be as easy and as straightforward as possible, always with a backtesting or a review approach. And the idea was also, in the last 5 years, you had the emerging trend on machine learning. So the idea was, what is it? What do you do with it? And I think you have multiple perspectives related to AI. So here the point is, sometimes we are all users of AI and machine learning, but sometimes we're also supervisors. And in that case also, how do I guide the company in order to apply new techniques, which are really at the frontier, but tomorrow that may be something that is becoming a standard in the market. So that's a bit the idea.
No, thank you, Vastin. And Paul, could you speak a bit about your background and the role of AI and what you're doing?
Sure. So I'm a 25-year person in the industry. I started in front office at Goldman and spent 4 years there in fixed income research. Moved to the hedge fund group at Merrill, and around 2004. And so I've been around risk problems really ever since then. And so long, background in first as an embedded risk manager in front office activities, and then later in my career I became a CCAR expert and did a lot of work in bank stress testing and problems at the intersection of risk and capital and strategy. And more recently at FTI, I've been at FTI almost 5 years now, and I work within a CRO remit dealing with all kinds of problems that chief risk officers, chief compliance officers face in enterprise risk, third-party risk, credit risk, and others. Model risk management has always been an important topic for me, and it has been here as well. I've delivered 3 or 4 engagements focused really only on that, and it comes up on most of my engagement work here. And AI has developed off of that. It's within our model governance framework. We often get questions around AI and how to integrate that into those programs. I've worked on a few cases that are specifically around AI, specifically machine learning for credit decisioning, and getting an opinion from our firm as to whether or not a model was fair and unbiased. And we did a quantitative study, and we looked at some regulatory requirements around redlining and UDAP and some of the credit risk aspects of that vendor was working around. We've seen machine learning for customer risk ratings in many cases. We're seeing it increasingly. Several of our clients are using it in transaction monitoring within anti-financial crime tools. And so that's becoming a very common use case now. And the machine learning techniques have become quite sophisticated there. We've also had engagements here where we've had clients use machine learning techniques actually within a classical econometrics case, where they use machine learning tools to help identify variables that would go into a regression model. So usually that's gradient or adaptive boosting techniques to help identify the best variables to go into to a classical regression model. So that's a ML adjacent. Really, it is an ML technique to help pick those models, those variables. So there's a lot of governance questions that go along with this. And the RAI was really helpful for me in filling in some of the gaps around some of the work that I've been doing in this space and giving me a broader framework around it. So looking forward to speaking to that.
Yeah, that's great, Paul. And so, I mean, you touched on a number of things, and so I just wanted to kind of follow up. I mean, we hear AI being discussed more and more as sort of almost or actually a board level concern. I mean, both in terms of risks and strategy. I mean, what do you think is kind of behind all that, or can you speak to that a bit?
Yeah, no, absolutely. That's a real question. And some of our clients are really asking us to help put together a RACI model for this, responsible, accountable, consulted, and informed view for different kinds of risks around this topic. It tends to start at the board level. We think about bias, explainability, data privacy, and data governance. Those three topics are usually the main topics. Within data privacy, there's both the PII component, individual use data, and then the second question around fair use of IP and what constitutes transformation. And so those are usually the first places that the board wants to go. Going down a few levels of altitude in the organization, the model validation people that are used to doing back tests and benchmarking of tools are asking some broader questions now about how model outputs are interpreted and what the business use cases are, what some of the macroeconomic and market scenarios are in which models may break down. So that's a topic that existed for sure, going all the way back in the SR 11.7 days of model risk management. But I think AI has been a good forcing device to get more shops to revisit that question and ask some of those broader questions around the model validation process and really getting beyond only the quantitative reviews, which are essential, of course, but going really beyond that to thinking about some of the use cases and some of the scenario-driven questions that really have to be asked about what can go wrong and where can models really fail.
Thanks, Paul. And so, Vasan, I mean, you're a chief risk officer. I mean, what do you see as kind of driving a lot of this, concern? I mean, not just from the risk side, but from the use of AI in terms of forward-looking strategy and so forth, as contributing to the overall business. I mean, can you speak to that a bit?
Yeah. So basically, the idea is AI is everywhere. So if you're not from a sense, if we look at this from an external perspective, everyone is doing AI. So basically, the first question that comes when we establish a roadmap for multiple years is, what are we doing with AI? So then, of course, internally, if we go from the external environment to what we can do internally, there are a lot of cases that are already out there. So basically, where do we profit from it? So in terms of operational efficiency. So I'm speaking about contact center, for example. You have an AI that, if it's well modeled, will say what is the most or the highest priority, for example, for an agent to take a call, to write an email, to answer to someone. So what is kind of the priority? So that's kind of the topics in the AI sphere. But the idea at this stage, Bill, at this stage is mostly topics related to how to improve the efficiency of operations within the bank. So we are a digital bank, and we are much more like a factory. So we have a lot of processes. They're all digital, so we have to measure them. We have to take that data, create value out of this data, and AI applies very well because we can also make all the topics related to the infrastructure of those elements. But yeah, the idea is we have a roadmap which is strongly impacted by AI. And the idea from a chief risk officer perspective is, how do you guide the company? So we are trying to go into that frontier, taking a bit more risk with new technology, which may be not established. But the idea is also on my side, how do you guide it? And when the RAI certification and also the curriculum was very useful, that it gives you a view about all the AI out there. So we say AI, but there is also, I prefer the word machine learning. But the idea is sometimes it's easier to go directly to the LLM part, very easy, very neat to deploy on an IT model. But let's not forget about all the machine learning, and let's not forget about all the econometrical topics. Sometimes the easy way is sometimes the more complex way. And the role on my side is to take all these opportunities and also to say, maybe we can do this differently with something that is, and I come back to what Paul mentioned, something that is a bit more explainable and a bit less, maybe a bit less effective, but how do we take the right decision regarding how applying machine learning and how we apply AI in the organization? That's a bit the broader picture.
Thanks,
Yeah,
Vass.
I can build on that, Bill. A few comments there. That's, I think, really important. There are probably some people in the audience that were thinking, coming to a webinar like this, that it's really just about LLMs. LLMs have become such a central, part of the mind share in this space, and they are essential. And it's a really exciting development in AI for sure. But there's kind of really three big buckets the way I think about this. It starts with the classical econometric techniques, and then second is what I would call classical AI, and then the third is the LLM piece. NLP, natural language processing, is sort of an appendage off of that third LLM piece. It occurred chronologically between the classical AI and the LLMs. That second group, though, that classical AI, is really where we spend a lot of our time in this space, particularly within the credit risk modeling, the anti-financial crime modeling that we're doing, the customer risk rating work that a lot of our clients are using AI for. A lot of it is really much more that classical AI techniques, unsupervised and supervised, semi-supervised learning techniques, where it's just about labeling a lot of data and looking at features and identifying the right techniques to build out models and getting to adequate performance metrics. Our legal clients are certainly far along on the LLM side of things. And so they're looking at how they can use LLMs for legal research and to help do document analysis. There can be really useful things within LLMs to say, here's two versions of a document. How are they different? Or how does this reg differ from a reg in Europe, in the US, for example? And so LLMs can do a good first job with some of that. They will still hallucinate, especially with the reg side of things. I'm working on a case now where we tried to use some LLMs for that, and we got a lot of hallucinations on that, frankly. But on the first part, the classical AI, which is really more of where the RAI exam goes, there's a lot of rich material there. And so I would encourage people to really think about that piece of it and understand, the space in a more holistic way, and not just go right to the LLMs.
Yeah, thank you, Paul. Thank you. So, let me kind of bring some of that to the RAI. Let me ask you, with all of this going on, right, with all of these issues, both risks and opportunities and different parts of organizations, et cetera, how do you think that the material which is covered in the RAI program would benefit someone out there, or which type of person would it benefit more or less? Or can you speak to that in a general sense? How would this be helpful?
Yeah, I'll provide my view. I'm sure Vasan has his own views from a CRO perspective. For me, the ethics framework provided, and the risk management framework, and the model validation and data areas, all covered in chapters 3, 4, and 5, were really essential broader framework tools that gave me just a richer kind of academic background in this topic. I had already done a few applied cases at FTI in this space. I've been working with machine learning things for a long time, but it gave me the ethics and risk frameworks that I didn't have before, in the way to really articulate some of the big questions about how to approach integrating machine learning into real business problems in a way that made sense for boards and senior managers. So for me, it was that material that was the most useful. Chapter 2 is where you get into all the detailed quant material. And so that was a good review and update for me. I'd been a financial engineer for a long time. I don't do as much of the hands-on now as I used to. So that was a good kind of review for me. For some people listening, if you're not that quantitative, the Chapter 2 material will give you a really good workout in some of those techniques.
Thank you, Paul. Vasan, and any perspective from you on this?
On my side, the need, I think it came from a business team inside the bank. So we are a digital, so a lot of an IT bank. We build a lot of stuff from an IT perspective, and it started with a new project. So I went very deep into the framework that NIST is, for example, a very nice AI framework, which is the one of NIST. It was very expensive, very detailed, very great to give guidelines. But then it was one way to look at the picture. And when I found the RAI curriculum, from my personal experience, I think it was kind of very interesting to see the broader scope. So not only a bit of IT-based or IT-specific NIST AI framework that is available, which is great anyway. But with the curriculum, you can see the broader scope of the story. For example, are really interesting to the concept. So in the curriculum, in the delivery, you have a lot of concepts being presented. So not only the math, but also the concept, which is always interesting to see. Okay, if I don't want to go on the math side, can I understand what is being explained there? So a lot of concept, very interesting. And it's a lot of food for thoughts. I think also when you have time to get at the end of all the pages and of all the curriculum, because at the end you also have those type of questions is, okay, you understand the concept, you understand what is being presented there. You also understand how you could apply it. That was very interesting especially in few samples. You could understand why cannot I do that in my bank, or why can I do that myself? And then the last part was on the ethics, were really interesting because it asked a question about, okay, you understand the tool, you understand the risks, but then what do you do with it? That was really the end of the question as someone that needs to discuss those type of technologies. So that was my picture and my path into the topic and how the GARP certification helped me.
No, that's great. I mean, so, we're very happy to hear things like that. We try to provide, information and learnings across a range of topics. So, I mean, I think each of you have kind of maybe different areas that were most relevant or most useful. So that's, wonderful to hear of that. And I think you actually inadvertently answered one of the some of the questions we've gotten from the audience. We had a couple of people asking about, some of the national or international frameworks that are out there, such as NIST and the, EU AI Act. And yes, all of that is covered. I mean, we have a whole, we have meaningful coverage of a variety of relevant national and international frameworks. However, like our general approach is that, we want to provide people with, the ability to have a thought process independent of regulation, and so, I mean, like there are certain ways of approaching issues, risk issues, governance issues that one would be doing in the even in the absence of regulation or legislation. But of course, you need to be aware of what the relevant regulatory and legislative frameworks are. So we provide all of that, in there. So Vastin, let me stay with you for a moment. So AI, it's kind of coming into a lot of organizations, it's coming into a lot of professions, it's coming into risk management. I mean, just in a general sense, like what do you see its like impact in terms of, impact on risk management practice and the risk management function?
Thank you, Bill. It's a great question because all this AI path starts with some kind of unlearning what we learned. So as I said, we are a lot into a quantitative topic. So we know the models, we study the models, we know how to apply them, we know how to backtest them, and then you kind of go into a field which is less explanatory. I would say it like this. Sometimes you have to live with the fact that you cannot really explain what is being brought to you. And I think that's one of the really humbling part of the journey is that you knew a lot of elements on your quantitative side, non-AI, I would call it like this. And then you have a kind of conflict in your mind, I would say, because you have all that part of your knowledge that works very well. And then you start with AI and you see that even without anything, a model can really be better than your own model. So sometimes I compare a model that we created to originate credit, for example, that works very well based on our backtesting. And I also checked how quick a new machine learning model can create another decision tree, for example. And it works even better. So the point is, we have to learn to unlearn what we did well in the past. It's a bit difficult to start with, but this is really the first part of the AI topics that we had. Is in order to start and to use it, you have also to accept that what you're doing today, even maybe it's top notch, the power of AI is so high that you can even go beyond and even get so many new variables in your model that you cannot do it with the knowledge that you have or the knowledge that I have from my studies, for example. So that was the stepstone, I think, is you need to let that door open and to also be humbled by the fact that there is so much capacity in terms of power computing, then it can do, I don't like the word miracles, but it can exceed what you're doing with the scope of human intelligence that you can apply to some topics. That was A. And the B part of it is like you also, and that's why the certificate is very interesting, is you need to be thoughtful about the results. So if you cannot explain something, how are you going to apply it? How are you going to say that it works? How are you going to give confidence into your environment? So those were kind of the two coins, the two flips of the coins. But yeah, both of them exist. But that's really, I think, the main topic about AI. The use cases, they can be found very easily. But then the idea is how do I do as a risk manager, basically, to not create systemic risk in my bank or in my environment, because I have a model that is going to give a good answer, but once every 10 times he will give a bad answer, and that can cost me an extreme amount of money or efficacy in our operations. So that's a bit the idea. The use case, that's not really the topic because you can find so many use cases, but it's really how to approach that opportunity about efficiency or use cases. I don't know if I answered correctly the question, Bill.
Yeah, no, that's great insight, Vas. And Paul, is there anything you'd like to add to that?
Yeah, I mean, there's always a question about, on the explainability side, some of that is not just about self-imposed needs that you want to have there, but many of our clients come up against regulatory requirements there. And if you can't meet a certain standard of explainability, you can't use certain models. So that's a significant issue, certainly in the US. I think it's in Europe as well. One area that we like to work with is what I mentioned before, is using some machine learning techniques to help design traditional models. Particularly reverse stress testing is a good example of that. Our European counterparts right now are building reverse stress tests for geopolitical risk. And a few of them are talking right now about, can we use some AI tools to help us pick the variables that would go into that reverse stress test. That's a great example where you can use AI techniques. You get to a particular output, a set of basket of variables that you want to work with in shock in a reverse stress test, and then you take it from there in a classical econometric world. And there you can demonstrate that everything is fine. The fact that you used ML to pick the variables is not a problem. So there we don't have any problems of this type. That's a great use case where we can apply machine learning in a way that's very regulatory, compatible and friendly. So yeah, that's really the biggest concern that a lot of our clients have right now. And the data privacy and data governance is, of course, another really big issue that can be an impediment to working with these tools. So yeah, but there's a wide range of different use cases that different kinds of financials and non-financial corporates are applying right now to these, with these kinds of tools. So I touched on a few, but that's really as much as I think I can say in a broad answer.
No, that's great. Thank you both. So we have some time left. So let me see if I can get to some of the questions from the audience who have been patient with us or patient with me. So let me see if I can just attend to a couple of them before putting one or two to the panelists. And possibly to Marta. Well, we received a number of questions concerning the technical level of difficulty, the mathematical, quantitative level of difficulty, etc. And so what I can say is that it is absolutely not a math test, and it is not a programming test. There is technical There are technical concepts which are covered particularly in Module 2, which is the tools and techniques section. But we do our best to present these from a critical concept perspective, with some of the mathematical explanation along with it, right? But we want you to be able to understand what's going on without having to necessarily work through all of the equations. We know that people come to our programs from a variety of different backgrounds. Some people are extremely technical, some people less so. Some people are right out of school. Some people are many years, outside of school. So we're aware of that, and what we want people to come away from the program with is an understanding of the importance of how these methodologies work, how these models work, and then what should you be thinking about if you're implementing these models in your organization. So we actively try to work on the material so that it's accessible to a broad range of candidates. We present optional deeper dives into some of the more technical areas for those who really want to do that deeper dive. But we try to present the material in a way that even the non-technical person can feel confident that they understand what's going on. They can ask the right questions. They can be part of the conversation. So that's how I would present it. Okay, so with that, we also received there are a number of questions that I guess I would group under the sort of general framework of Vasen and Paul. You both have the FRM, and then you have the RAI, right? So, can you talk? Is there an intersection? Is it how should a risk manager be thinking about kind of augmenting or enhancing their skill set with an additional set of learnings? I mean, is it worth it? Does it integrate? Is it kind of is it a separate endeavor? How does it fit together with someone who may already have a foundational background in risk management? Would either of you like to take that?
I could take a crack at it first. I definitely, for one, see the curriculums between the two as being fairly non-overlapping, quite distinct. They both contributed to my abilities as a model risk manager, for sure. Right, the FRM gave me a lot of tools that I used every day in model risk management projects, and some better techniques to approach problems or frame problems. Particularly on the audit side, it was useful, I found. But really, for any kind of model risk management problem, it helped with that. And then also just designing new models. Those were classical models, mostly Vaughan stress tested models. I used a lot of FRM concepts in those cases over the years. This also contributes to my abilities as a model governance person, model risk manager. So in that sense, it is overlapping. It's kind of two windows into that space, but it's a much different window. It's a much different kind of curriculum. It's about understanding these particular tools and techniques and how they hang together and how they work together, and then how they have evolved over time. And it gives you a good overview of the whole, classical AI into LLMs. And then the ethics piece of it was fairly distinct to AI. There are ethics questions around models, for sure, that also, you probably benefit from if you haven't seen that before from the RAI curriculum. But a lot of that is really specific, in my opinion, to the AI space.
Thank you, Paul. Vasen, anything you'd like to add?
Yeah, maybe on my side, the difference between the two is the FRM is kind of personal specific testimony here, but it's really, I validated my knowledge. I didn't learn new elements, but I validated the knowledge that I had. I will call it like this. So in terms of curriculum, it was really specific. And when you go into the RAI, then I would say that it opened doors. So basically, it's more like understanding a new toolkit that you can use, new or less new, depending on who is reading it. But basically, you have a new toolkit in front of you that you can, it's agnostic to everything that you can do. You can have so many use cases that what matters is a toolkit, and those models is the way you do. And also, I think that they're not really overlapping, maybe on model risk management for a small part, but I also have the impression that the the AI side and the RAI side makes the model risk management topic live in a bigger way compared to the FRM side when those are already pre-tested models that are there, quantitative or financial models that are there for more than 30 or 50 years. When we speak about Black and Scholes, for example, it's a really old model. And it's very interesting here to have in the RAI part toolkits that allow you to create new model to explain differently something that existed already. So that I think the real difference from my perspective is known knowledge on the FRM that you need to master, of course. And then on the high side, a toolkit with its opportunities, but also the weaknesses that need to be mastered and the conflicts that it can create to an organization. But they were not overlapping from my perspective.
Well, thank you both. So we've also gotten in a number of questions that I guess I'll try to group up together under the general framework of AI is a rapidly evolving field. How does this program stay current and relevant, and how would I stay current and relevant after successfully completing the program? So what I can say is that we are in, as I described previously, we are in continuous conversation with industry, both through, discussion and meeting and survey. We have an advisory committee that, we meet with on a regular basis, a variety of, backgrounds. So we're always looking at what's going on and comparing that to what's in the curriculum to see if there are ways that areas that we need to sort of expand on, deepen, or maybe, kind of downsize a bit, as the needs of industry evolve and as the field evolves. So we update the curriculum on an annual basis. So the 2026 material will be somewhat different from the 2025 material. We are always looking to improve and evolve and make it, not just in step with what's going on, but even better in terms of its presentation. So we actively try to make it as current as possible. We update the material on an annual basis. We do have a very active continuing professional development program. So once you complete the program, we encourage you to participate in that, and that provides you other learning opportunities, through either attending sessions or reading material or webinars or so forth. That's a way to stay current. Networking, through the GARP network is also certainly a way. But as I may have mentioned before, if you successfully complete the program and you maintain your individual membership, you will have access to the material going forward. So, so the year after you do the program, you will have access to the online learning environment. So if we update the material, if we put in new readings or new coverage on generative AI or agentic AI or whatever the topic happens to be, you will be able to avail yourself of that material. So we know that the challenges that professionals face evolve over time. As you move up in an organization, change roles, change organizations, the technology changes, et cetera. So we want to be there for you throughout your career. And this is a way in which we would like to be your sort of, career-long learning partner if we can be. So as the program evolves, you will have access to it. So that, I think we're pretty much at time. For the questions that have come in that we have not been able to get to, we do have a record of them, and we will try to attend to them even after the webinar. This whole presentation has been recorded, and you'll get a link to it afterwards. So, if there's anything you missed, you want to go back to, it'll be available to you. I do want to encourage folks to consider this program. Early registration, the $100 less price point is open until January 31st. So, we hope to see you if you choose to continue on this journey. I wish to thank my colleague, Marta Fonseca, for her time and sharing her insights with the organization. And I want to thank Paul and Vastin. It was a very illuminating discussion. Your insights and experience, I think, were very both interesting and valuable. And on behalf of GARP, I want to thank all of the folks out there who joined us today for spending a little bit of time in your busy day. And we hope to be there for you on your risk and AI journey. So thank you very much.